Hi, are you new to the stock market and looking for some tips to get started? Stick around for all 10 tips and you'll be on your way. Today, we're going to navigate the exciting yet complex world of stock market investing. Don't feel intimidated or that you can't soon call yourself an investor. Be knowledgeable and you too can become financially free. You, the one watching this video right now, even if you're having difficulty visualizing it, the difference between wealthy you and not as wealthy you is actually investing even just $1 to begin your stock market journey. Don't keep thinking about it and talking about it. Take action, even if your first step is a very small one. But before you go flying off in that blinged out, environmentally friendly private jet, we'll share 10 essential tips that can help you make informed decisions and potentially grow your money into wealth. From understanding your investment goals to the importance of continuous learning, each of these tips will provide a stepping stone towards your investing journey. So buckle up in that dream car you've always been dreaming of as we peel out into the world of stock market investing with our first tip. Tip 1. Understand your investment goals. Before you jump into the stock market, take a moment to reflect on why you're investing. Are you saving for retirement, funding a child's education, building toward a new business venture, or just simply want more money? Though it's true money can't buy happiness, having more money can make things easier. Having clear financial goals will help you make informed decisions. Consider your risk tolerance, time frame goals or time horizon, and financial circumstances. Long-term planning is crucial, but you don't have to be wealthy or anywhere near to be an investor. Remember, not everyone that is wealthy comes from old money, cushy jobs, or hits the jackpot. Investing is more about learning than it is about the amount of money you have to invest. It's not about getting rich quick, it's about steadily growing your wealth over time. Remember, clear goals set the foundation for successful investing. Tip 2. Learn the basics. Before you dive into the stock market, it's essential to grasp fundamental financial concepts. Understand what a share is. Know your PE ratios from your dividend yields. Understand market orders versus limit orders, and get a handle on the difference between bonds and equities. These are just a few of the essentials that can make or break your investing journey. Think of it like learning to swim before jumping into the ocean. So, delve into books, watch educational videos, or even take a course. After all, knowledge is power in the world of investing. Tip 2 continued, breaking down the basics. Now that we've touched on some fundamental financial concepts, let's delve a bit deeper. Before we start, let's define what a share is. A share represents ownership in a corporation and constitutes a claim on a part of the corporation's assets and earnings. Now let's delve into what a stock is. A stock refers to the ownership certificates of any company in general, while shares refers to the ownership certificates of a particular company. So if you say I own stock, it's like saying I own water, but if you say I own shares, it's like saying I own water from the Pacific Ocean. Next, we move on to PE ratios, or price-to-earnings ratios, give you a measure of a company's current share price relative to its per-share earnings. This helps you evaluate if a stock is overvalued or undervalued. Next, we have dividend yields, which represent the ratio of a company's annual dividend compared to its share price. This can give you an idea of the return you might get from the dividend payments alone, without considering any potential capital gains. Then we have market orders and limit orders. Market orders are instructions to buy or sell a stock immediately at the best available price. On the other hand, limit orders set a maximum or minimum price at which you're willing to buy or sell. This gives you more control over the price of your transaction, but there's a risk that the order won't be filled if the stock never reaches your limit price. Lastly, we have bonds and equities. Bonds are essentially loans made by an investor to a borrower, typically a government or corporation. You earn interest on the loan and get your money back when the bond matures. Equities, on the other hand, represent ownership interest in a company. When you buy equities, you're buying a piece of the company and can benefit if the company does well. Understanding these concepts, including what a share and stock is key to making informed investment decisions. So equip yourself with this knowledge and prepare to dive deeper into the world of investing. Tip 3. Diversify your portfolio. Diversification is like cooking a well-rounded meal. Just as you wouldn't want a plate full of only broccoli, well, maybe that wouldn't be so bad. But when it comes to money, your investment portfolio shouldn't be all in one stock or sector. That's the golden rule of wise investing. Mixing it up with a variety of investments helps to balance out risk. If one stock performs poorly, others might do well. You're spreading the risk, not banking on a single outcome. Think of it like a safety net catching you when certain investments fall. So remember, in the world of investing, don't put all your broccoli in one basket. Tip 4, don't just follow the herd. Picture this. You're at a party and everyone is raving about the latest hot stock. It's tempting to jump on the bandwagon, isn't it? But remember, investing isn't a popularity contest. Making decisions based on hype can lead to poor choices and potential losses. Instead, do your research, understand the company, its market position, and future prospects. You wouldn't want to hand your money over to a stranger just because everyone at the party says you should. Investing should be based on sound analysis, not hearsay. And with the internet at your fingertips, you have the power to educate yourself. So resist the urge to just follow the crowd without doing your homework. You may discover critical information they did not. Stay informed and make your own decisions. Tip 5, invest regularly. A smart move for any investor is to invest on a regular basis. This consistent approach allows you to reap the benefits of dollar-cost averaging. What is dollar-cost averaging? Well, it's a strategy where you invest a fixed amount of money at regular intervals. This way, you buy more shares when prices are low and fewer when prices are high. Over time, this can lower the average cost per share of your investment. Remember, in the world of investing, consistency is key. Tip 6, monitor your investments. Just like the garden you nurture with love and patience, your investments also need regular attention. Observing the performance of your stocks helps you understand market trends and adjust your strategies accordingly. This doesn't mean you should panic with every dip in the market. It's about staying informed and making calculated decisions. Remember, it's not just about buying and selling, it's also about learning and adapting. So, tune into the financial world and let your knowledge grow with your investments. Keep a close eye on your financial garden. Tip 7, be patient. The stock market is not a sprint, it's a marathon. Your investments need time to grow and mature. The allure of quick profits might be tempting, but it's the steady, long-term gains that build wealth. So hold on to your stocks, especially when they're performing well. It's the tortoise, not the hare, that won the race. Don't let a slow or bumpy start discourage you. Investing is a journey that requires patience and persistence. Though it is possible to make a mint overnight, we encourage long-term investing, as it is unfortunately more common for investors to lose the farm when gambling with the stock market. Tip 8, don't be greedy. The stock market isn't a get-rich-quick scheme. It's a tool for building wealth over time. Greed can lead to rash decisions like chasing hot stocks or trying to time the market. These strategies rarely work out. Instead, aim for consistent, realistic returns. Remember, even Warren Buffett, one of the greatest investors of all time, advocates for steady growth. You're not just investing for tomorrow, but for years down the line. So set reasonable expectations and stick to your plan. Greed, for lack of a better word, is not good. Tip 9, seek professional advice. There's a lot of information out there and it can be overwhelming. That's where professionals come in. They're trained to understand market dynamics and can provide valuable insights tailored to your specific needs. Think of them as your personal guide through the labyrinth of investing. They can help you avoid common pitfalls, refine your strategy, and maximize your returns. But not everyone has enough cash on hand to hire a personal advisor. Luckily, platforms like YouTube have a wealth of knowledgeable and successful investors willing to share their wisdom, and hey, they were once new investors just like you. Just remember that your number one investment should always be in knowledge, because knowledge is power even when it comes the enigma that so often is the stock market. That's why as you grow your wealth, you should consider seeking professional advice even if it means shelling out a few bucks. Until then, thank goodness for YouTube. And finally, tip 10, don't stop learning. Investing is an ever-evolving landscape with new strategies, tools, and markets emerging all the time. It's vital to stay on top of these changes. As a new investor, capitalizing on the right stock at the right price is everything. Buying in at a low price and watching it grow over time is one of the easiest and most satisfying ways to build your wealth. Read books or listen to audiobooks, follow financial news articles, and set up alerts with Google News to be notified of the latest updates regarding your stocks or companies of interest. Sign up for educational courses, whether for free or for a justifiable fee. Keep your fingers on the pulse of the economy and the trends shaping it. Remember, investing doesn't have to be a one-time thing, it's a lifelong journey. The more you know, the better equipped you'll be to navigate the financial markets and make sound investment decisions. Knowledge is the best investment you can make. And there you have it, 10 tips to help you navigate the stock market. We've journeyed from understanding your investment goals through learning the basics, diversifying your portfolio, and avoiding the herd mentality, to investing regularly and monitoring your investments. Remember, patience is key, greed can be your downfall, and seeking professional advice can be a game changer. The internet is at your fingertips, so keep growing your wealth of knowledge. Set aside whatever money you can each day, week, or month and invest prudently. There are services and apps that allow you to invest free of brokerage fees, but understand the risks involved with investing on your own. Set a goal right now to invest even just $1 into a stock that you believe will be successful because you put in the research. But never invest money you aren't willing to possibly part ways with. Invest within your means and in a way you can never lose, as you will always gain better understanding at the very least. This has been a quick trip through the topic of stock market investing. Now, let's see you peel out one more time in that dream car of yours that I'm sure to see you rolling around the real world in soon enough. But remember, it's the tortoise that won the race. Good luck and happy, wise investing. By the way, this was my first YouTube video on the topic of stock market investing. If you hit that thumbs up button and give this video a like and also subscribe to my channel, I'll send out positive thoughts into the universe that you get that dream car and all that makes you happy in this world. Well, I'll still do that anyways, doing it right now actually, and done. And if you leave us a comment, I'll do my very best to provide my positive thoughts to you right there. Also, let us know in the comments if you made that first step and invested in the stock market. What did you invest in and how is it going so far? Thank you so much. Now go learn, earn, and invest in you.